Okay, good evening all. It is Wednesday, the 20th of March. It's 8 p.m. I don't have a support team around me, so I'm just checking the microphone's working and everything's working. No one's there to tell me whether it is or not, but everything seems to be in order. So thank you for joining me, if you're joining me live. If you're consuming this after the event, which a lot of people will do, then thanks again for stopping by. My name's Neil Bussey, and this evening I'm going to be talking about capability gaps within your business. Now, I run a fractional executive company working with SME businesses predominantly, and mostly in the engineering space, which is my background. And I work with SMEs at those sort of inflection points in the life of the company. So that might be where they've scaled to a certain size and they want to sort of kick on and professionalize themselves, and maybe they need investment for that. Or maybe it's at the other end of the spectrum where they're looking to retire and pass the business over to family or pass it over to different management, or even to sell the business, and they need to sort of structure that appropriately and professionalize that and make it maximize it, if you like, and optimize it. And there may be at any point within a company's life where it becomes obvious that that's a good idea, and so I may get involved at other points as well. But it's normally those sort of inflection points where something is changing, where there's maybe some jeopardy, or there's a thought process around getting external help to help professionalize the business and run it as perhaps a bigger business would be run, and looking for expertise from sort of bigger businesses to what they would do and to sense check against that. So that's my involvement and in my business life today. Why should you listen to me? Which is a fair question. I've been in business for 25 years. I started as an engineer, and I think engineers make good business managers. I guess that I would say that, but we're very logical and process driven and measured in our approach. So I started as an engineer, but I didn't stay within engineering, and I kind of sold my soul, if you like, and went to work in manufacturing and to work for manufacturers of products. So I've done sales, I've done managing sales teams, and ultimately managing departments in companies and eventually companies as well. So I have an MBA. I've travelled around the world working within businesses. So I've worked for some very large privately owned companies, multinational privately owned businesses, very cash-rich businesses, as well as a FTSE company, a large SME, sort of $100 million size SME business, and some startups, turnarounds. I've had my back against the wall a couple of times. So I've worked in businesses that are very successful, but I've also worked in businesses where options are much more limited, and therefore you're in much more of a challenging environment. So I've seen both sides of the coin. So I think I'm qualified to give my view as to how a business should be run, and certainly an SME business that wants to grow and wants to tap into expertise from somebody who's had a sort of larger business experience as well. So that's me. The idea this evening is to look at capability gaps within a business. So when I work with clients, I'll go through a process ideally at the start to sort of identify what the priorities are. And part of that process is looking at capabilities and understanding where the gaps are, and then using that evidence. It's very much a kind of evidence-based approach to create a roadmap which will include priorities around filling those capability gaps. So where it fits into the picture, and let me throw up some slides here. So this is the title of the presentation, Finding Your Business Capability Gaps, and it's a practical session. So I'll show you the process that I go through, or the part of the process I go through to try and identify those capability gaps. And I think it's not sexy. I sort of promoted this as being sort of a kind of nerdy exercise, really. But this is getting under the skin of a business. So there's a lot of top line, nice looking stuff, and this is really getting into the guts of the business. So I'll show you the sort of steps I go through onto a granular level. This is only going to be for 20 minutes or half an hour tops, to show you that process, and then you can apply that perhaps to your business into situations that are relevant to you. So in terms of the problem itself, when I look at the UK demographic particularly, what I see, this is government information about the lifespan of businesses, or the age of businesses as a snapshot in time. So this is 2022 information. I don't have the 2023 government figures just yet. I'm not sure if they're out or not, but it won't look wildly different from this. So what this is telling me is that the majority of businesses, or the largest group of businesses, is in the 1 to 4 year category, and that's just over 35%. There's over 15% coming up to 20% there. Things in the way. 15%, yeah, in the sort of under a year old, and then in the 5 to 9 year bracket is the other largest group. So what this is telling me is that when you group those three together, nearly 3/4 of all businesses are less than 10 years old, and then it disappears. Then it falls off a cliff. So businesses that survive and get to 10 years or get to 20 years, they're the outliers. And so the reality is that businesses don't last very long. And I don't know whether the UK is indicative of businesses around the world, but I suggest that it would be in the Western world. So what this means is that if you're looking around you and running companies, it may not be the best idea to take your lead from how other businesses are run, because most businesses ultimately over the long term won't be successful. And that's quite a sort of sobering idea and statistic. So yeah, 4 in 10 new businesses make it to 3 years. So 60% get wiped out in the first 3 years. And there'll be plenty of people, looking at this material that have sort of longer-standing businesses. Just realise that those are outliers. So businesses that make it to 20 years, it's a 1 in 10. So 90% of businesses don't get that far. And the average age of a business, which for me is kind of a proxy for the life expectancy, it used to be about 10 and a half years, and that's come down. It's currently 8.5 years. So it just tells me that we're working in a very difficult trading environment at the moment. And therefore, most businesses are not geared for longevity, and they're not structured in such a way that means that they can take advantage of the opportunities that exist. And that's a real shame for society as a whole, isn't it? Businesses these days are more about sort of corporate social responsibility and not just about making money. And so if businesses are successful, hopefully society is successful and all the stakeholders in that process are successful. So if there's a high attrition rate, then there's a lot of suffering that goes with that. And that's something that I'd look to help to address and make a contribution to addressing through my business. And that takes us back to this horrible looking sort of hockey stick graph, which you'd hope would be loaded up at the bottom end. Lots of businesses come through and they remain, but it's just not the case, unfortunately. And the symptoms of that, in my experience, has been working in very profitable companies, but then also in turnarounds and companies that are sort of sailing closer to the wind, if you like, is that in those latter businesses, there tends to be very little room to move. So if you're sweating on the cash flow all the time, I've worked in businesses where there's an expectation that I can give them, the shareholders, sort of 3 years worth of projections and forecasts, and I'm wondering how to pay the salaries of the staff next week. So you're in that short-term thinking, and that's stressful. You're forced into sort of tactical thinking rather than being able to be very strategic about what you're doing. And it's a desperate situation. And so for every business that disappears off that graph every year, there's many more that are still operating, but are operating with very poor sort of working capital positions and cash positions. And you kind of get in a desperate situation with that. The business is fragile. No one's enjoying themselves. It's not how we want to operate businesses. But what the information is telling me, and when you look at businesses that are operating and their cash positions, you realize that's the norm. Most people are sweating in their businesses, and a lot of them are not making it either. So again, quite sort of sobering statistics. So what's the solution? Well, I'm sure there's many ways you can skin a cat, but from my perspective and with my experience, I would say that running a company in a very deliberate way is the way forward. And if you can get to that position, and you can get to a position where you are profitable and you're fully utilizing your business and it's fulfilling its potential, then you get to a position where you can start to invest profits. And I've seen this as well in companies that I've run. And what you can do with invested profits, if you're wise with that, rather than just sort of keeping retained profits or paying dividends, is you can invest that back into research and development and into all sorts of other things which help to grow authority, help to secure your market position and make you attractive for investment, and get you onto the front foot so that you can actually make strategic long-term decisions, which helps to build resilience and prosperity. And that's a much more enjoyable place to be when you're running a company, I can attest to. So before you get into sort of working out the capabilities and where the gaps are in the capabilities, it's important to understand what the objective is of the company. And when I work with clients, it's not my business to tell them what their objectives should be. Most businesses are for profit, but having said that, there are many objectives that businesses could be working towards, and not just purely sort of endless growth and sort of shareholder value. Although that is normally one of the aspects to it. So what I would encourage companies to do, and what I got involved with a company in Australia that I went out to work with that had grown to sort of 100 million or so dollar turnover, was that it had become unwieldy. There was a lot of product lines. It was into things that we didn't have experience on. There wasn't sort of control in place. Costs were out of control. And the business had just got a bit woolly, if you like, and was making less money at that sort of higher end turnover than it had been in terms of delivering profit at sort of half the size. And so we sort of stripped it back and we said, okay, what would a world-class or a best-in-class SME business in this particular market look like? And then we defined that with financial criteria, but also qualitative criteria as well, in terms of morale of staff and retaining people and retention and how we were perceived in the market, etc. But a lot of it was built around sort of financial metrics. And if you want to get somewhere, you have to sort of define what the destination would be. So I think this is a good exercise. If you go onto my LinkedIn page, there's blogs on there, and there's a whole newsletter on there about how to build an avatar for your business, and there's a YouTube video. I can go into all the detail on it. We basically defined, and these are just example numbers and metrics, and it may be different for your business, but we have revenue and gross and operating and solvency and all sorts of measures around the cash flow of the business and the business's ability to operate effectively, and what they would actually look like in a best-in-class business in your particular sector. And once you've got those, that is your sort of blueprint. That is, how do we get to that then? And that is going to be the best of everything. It's going to be the best of marketing, the best of training, the best presentation of everything. So it's an almost impossible task to actually replicate that, but you're aiming to get as close to that as possible. And that's what we did. We said, if we can get to these certain metrics that we defined, we would be a sort of top 10, top 15 SME company of that size in Australia. And I've done the same exercise with companies since as well. So what I would do first of all is just sense check the company. It's important to understand that there's a group of people who have a collective purpose. So I don't want to get all sort of fluffy with this, but in terms of the vision and mission and the core values, that there is some underlying objective here that everybody's holding on to. And that feeds through into sort of strategic objectives and financial objectives as well. So I would do that as a first exercise. And that's not to do with the sort of capabilities, but I just want to make sure that's set, because it helps with the psychology of everybody that's involved, that they're on board with an idea and an objective that the business is working towards. But once I've got through that, then I would start to look at capabilities and start to group them into different areas. And I've just picked 4 here. I talk a lot to clients about profit and growth and risk and cost, because lots of business owners, and most businesses are for-profit businesses, are very interested to talk about how they maximize profit and how they grow. And how they mitigate risk or de-risk their operation as much as they possibly can, and how they control costs and get good value. And if they can do those things, that generally sort of feeds into the objectives they have as a business. So again, this is an example. You may have different objectives and different areas of expertise that you might want to focus on, but just humor me and sort of focus on these 4 for now. And so what I would then do is start to dig into this. And this is where it kind of gets granular, and it gets kind of the desk study sort of stuff that you don't see behind the scenes of how a business is actually put together, or a bigger business, at least the ones that I've been involved with. So I would take an aspect like profit, for example, and I would start to think about, in this particular business, and there are some generic examples of things that would deliver profit, but also some very specific ones for a type of business. And I would list those things out. And I've got templates for this, already. But I'd have to look at a particular business to see what's relevant. So an example would be a business that is for profit would have a USP. They'd have a unique selling proposition. They would have a really good understanding of how they're creating value and how they monetize value. So that's something that the company would have to have good competence around. Something else would be the structure of the business, for example. So how the business is structured will dictate how information flows, limits of authority, people understanding what their roles are, avoiding duplication and confusion, and all these other things. So the structure of the business is important, and I would expect a business to be structured appropriately, and we'll go into the detail in a second. Another example would be sales and marketing, obviously for profit. So how demand is created and how demand is converted, what's the cost of acquisition for different types of customers, depending on what products you're selling, and how that whole piece goes together. So we'd really want to dig into all of these individual components. And each one of these will then break down. As we peel this onion, we will get into activities that would feed into these. So I'll take one as an example. So we'll look at the USP, the value creation, for example. So now we've gone from the business as a whole, we've picked profit. Within profit, we've looked at one particular area, which is USP and value creation. And we start to dig into that and say, okay, under USP and value creation, what activities would we expect a business to have or to have gone through and to develop in order to feed up to USP, to feed into profit? So I'm going down through the layers here. And I would expect things like mapping the customer journey. I would expect a company to have a really good understanding of the customer journey of the people that they're selling to, and that will be mapped out. So we'll look at that in a second. Other things would be establishing the product market fit. as well as establishing a validation of the market as a whole. And if I went around the room when I'm presenting on this, and I take feedback, we could probably brainstorm 20, 30, 40, 50 different things that you would expect to see under a USP or value creation, that you would expect a business to have some competence around. So just humour me. I can't go through all of these in a short presentation, but we'll pick one. It's really about the sort of methodology here. So let's look at mapping the customer journey. If we were to map out a customer journey, you get to a point, say now we're actually at a point where we have a distinct activity. How does a customer or a company, map customer journey? And what I want to be able to do here is actually say, well, what would good look like, and then compare that to a set of criteria of what something like this looked like if it was done particularly well by an avatar, by a company that was best in class and that was doing this correctly. And again, I unpick this then, and I would say, okay, in terms of a company that's doing it really well, I would expect to go in and see a customer journey that is actually documented. It's not something that's in someone's head, but actually it's been taken down, it's been written out, and it's in a detailed format, and that somebody in the business has ownership of that. I would expect that it's been built with the involvement of staff, but of course that it's been built with client involvement, that there's been external input, so there's qualitative measures in there. And I would expect to see numbers as well. I'd expect to see quantitative data points within that, which are justified through evidence from the external market as to things that are happening. I'd like to see AI used. I'd like to see industry groups, publications, all manner of information pulled together, all the best technologies, all the best practice used and adopted to basically pull together and understand the customer journey. And I would expect something like that to be revisited regularly and improved on. So these are not my criteria. This is just what I would brainstorming would expect a company that's doing this particularly well to have all these things covered off. I would expect the last 2 points are really about sort of getting into deployment as well. So it's all well and good having these documents or creating these ideas, but you would expect everyone to be trained on that. And then you'd expect to be able to see evidence of this. If you've plotted a customer journey and you're working to that, then you would expect to see evidence of that in the sales and the marketing activities that then follow through as well. So I would have a particular criteria and I would have mapped the customer journey against that. And I would do this many times for all these different criteria. So what I would actually end up with, this is a spreadsheet that I can share with you. And in here, I've got all manner of criteria listed out. So for each one, I've got profit listed here, but under profit, I would then have growth, I've got costs, I've got all the other dimensions as well. And within those, there will be dozens and dozens of different sort of activities, the process, what good looks like. And then I've also listed on the side as well what the symptoms could be in the business if there's not a fully developed capability around USP or around training staff or around equipping certain areas of the business. So I started with profit. I had profit, growth, cost, risk as the 4 areas. And within each of those, within this particular document, there's a dozen or so of additional criteria that then falls through. And I have to go through each and every one of those and actually look at it. And what I'm not looking for is how well is the business doing it right now. I'm not looking for how good is your USP. If the business is trading and it's profitable, then I'm assuming and I'm hoping that the actual USP, and I would dig into that if I'm working with a client, that the USP is solid. What I'm looking for is the company's capabilities at being able to develop a USP, or the capabilities of the business to be able to employ people with the consummate skills, or to be able to restructure different departments and all the various things that would go into feed into delivering profit or growth or cost control or mitigation of risk. So this is a giant spreadsheet. This particular one is just a template. I would doctor this and adapt it for particular clients. If you're interested to have a copy of this, then by all means I can make that available. I'll mention that at the end. Like I said, it's a big document. And it's pre-populated with information at the moment, but that's a generic one that you could then change and adapt and use for your own purposes. So I would go through many, many different criteria. And the idea with this then really is to get to a point where you've identified, and it's almost like servicing a car or something. You have a column on there, and if the capabilities exist to be able to deliver that criteria, then you can green that out. But there will be areas where there's capability missing. And it's not about actually executing against this. It's not about them getting this done. It's about saying, do you have the knowledge? Do you have the wherewithal? Do you have the skill set? Do you have the resources? to be able to do this, as well as the sort of best in class as to what good looks like. The actual delivery of that comes later. So we build the capabilities, and then we have to talk about consistency and resilience, and actually delivering on these things and measuring them and making sure that they all actually happen. So that's kind of later. This is really just about sort of identifying those gaps of competence. So hopefully then you're starting to move from, and this is the opportunity that exists with something like this, is to move from that state of short-term thinking, of tactical thinking, and getting away from sweating cash flow and unfulfillment and sort of being in a desperate situation, into enjoying running the business. And as businesses grow and as they get more complex, nailing this stuff down becomes really, really important, as well as it does if you're looking to exit or you're looking for investment. And there's many times when this is something that needs to be looked at. And really, it should be looked at any point in a business's life. But like I said, there are points when people get to crossroads and want to sort of look at it. But if you can get away from that curve, away from the sort of the attrition rate of businesses that don't last very long, and get to a position where you're actually running a company profitably, folding profits back in, and making strategic decisions for the long term, then you're in a good place. But that takes a lot of effort and sort of planning to get to that point, to get you away from this sort of depressing attrition, like I said, of company turnovers. And if you can fulfill that potential, then that's the avatar that you can work against. And it's a moving feast, really. You can go back and revisit this, just as you would revisit a sort of capability diagnostic periodically, to make sure that you still have all those capabilities in place. So you set the avatar, you go into the business, you dig into all of those criteria, you score against them, you find where your gaps are, and then you bring that forward, and that starts to form some of the priorities for the business moving forward on a roadmap. And there are many other priorities that would sort of come out of a situation like this. And whilst the benefit for some of these activities is maybe longer term, you may be looking at sort of delivery over a year or 2 or 3 years, or even longer, depending on what sort of criteria you're working to. Going in and actually finding the capability gaps in your business will immediately give you clarity. It will immediately give you some direction. From an emotional point of view, hopefully it gives a renewed sense of purpose to people to see that they have validated what they're thinking, and they know that they're on the right track. And you know that those priorities that you're then working on have been validated, that someone's come in and actually looked at those and sense checked against that and gone and done the detail. And that's often a benefit of having an external party come in and take that view on a company and be able to help with that process. So what next? Well, I would encourage you to try that exercise on your own business. I think it's a very healthy exercise to actually create an avatar. Many businesses don't have that vision to actually think about what they could achieve and to validate that. They just try and they live hand to mouth. And if you live hand to mouth, then you're not setting a long-term goal to work towards, and the business can then sort of lack direction on the back of that. So I would go through the exercise of creating an avatar and actually putting the criteria in. On my profile in the newsletter there, you can read all about how to create avatars. It's often done for customers. You model customer avatars. It's very rarely done for business avatars, but I think it's a really good exercise. And there's no point really looking at capabilities and working out capability gaps unless you know what it is you're actually trying to achieve. It's only then that you want to sort of start digging into the business and working out what capabilities do we need to be able to deliver on that. If you want to play around with it, the QR code there will take you to a quiz. It's 2 or 3 minutes, and it goes into profit and growth and cost and risk. You can ask questions, about it. It'll ask you questions about your own business, and then it'll give you interactive feedback on that as well. So that's a very quick exercise just to get you thinking about that. It's completely free. It's something you can just click in straight away. It's very quick and easy to do. That may be a point to allow you to get started with an exercise like this. Additionally, the spreadsheet, which I sort of flashed up on the screen, it's a big document. I couldn't scroll through it because I was sharing the screen, and I couldn't actually get into it and scroll at the same time. But there's lots and lots of information in there as well. So if you're interested and you want a copy of that spreadsheet, then just my LinkedIn details are there. Just drop me a connection and we'll connect, and you can DM me and I can send that across as well, because that's another useful exercise. I didn't think this would take half an hour. It's just dipping in and just giving you a flavor for the sort of process and getting in on a granular level from a particular criteria right down into an individual activity, and then grading that against what good looks like. So that's really hopefully a useful, practical piece of information that I can leave with you. Otherwise, I'll leave it there and I'll close the stream down and let you get on with your day. Thanks very much.